I got it. I got it.
Oh, yeah.
So let me get the things going here and get the recordings going, guys.
I've been looking online.
Morning, Jill.
Can buy a nice house there. 2,000 square feet with land.
Okay, guys, we're off and running with our last sales meeting of the year, so welcome. Gosh, I'm gonna turn my phone off just 1 second. Okay. So welcome. Here's what we're going to go through today. Last meeting of the year. We're going to go through first guest speaker today, our only guest speaker today, Ted Leorakos here from United American Mortgage. We're going to talk about what you're likely forgetting to do in social media posts, something that's come up this week. And it's not me and Mike being fussy about it, it's the law. We're actually going to show you the law on some of the social media post stuff. There's a temporary Christmas discount on your next CRES NHD report. We have 2 approved vendors through CRES Insurance that get you extra coverage on your NHD. Productive conversations to have in this new market over the holidays, but more importantly, with your clients in the next few months. We'll be talking about that. I'm going to tell you about a Facebook Live housing forecast for 2023 today at 3 p.m. That's the thing. I was trying to, Mike, there's something today at 3 p.m. and that's what it is, because I want to watch this. So I'll tell you guys about it too. If you have to miss it though, you can always go back to Facebook and see it later. Mike's going to take you through 12 thank you notes for lead generation, because we often get asked, what should I say? That's hard. That's the hardest thing. And so we have that ready for you. Mike's got 4 ways to get referrals and grow your business. We talked about our MLS activity last week, what listed and sold and closed, plugs and wants, and other upcoming events. And with that, we're ready to turn things over to our favorite lender, Ted Leorakos, who brings our favorite cookies. Hey, Ted. Welcome, Ted.
Thank you, Bob.
Good to have you here.
Good to be here. Good to be anywhere at my age, Mike. So, volatile week. A consumer price index came out this week. The Fed's raised short-term rates 0.5% this week. So what happened to mortgage rates? They went down.
Yay.
They went down. Well, you know, there's one simple answer to why. Mortgage-backed securities are not the preferred investment from investors. Money is supply and demand. There isn't any demand for mortgage-backed securities. So interest rates will continue to fall. And
Even with the Feds going up.
Yeah, even with the Feds going up, the rates are going to continue to fall. Now, this may not be a good thing long term because we don't know. The last time, this is a trivia fact, the last time the Fed funds rate was this high was in 2007, just before the crash. But many differences. We, and Alita, my assistant, who drove all the way in from Dana Point to beat me here, will tell you that during those days, we were getting people loans with no money down, no verification of anything. That's not the case now. Over the last 7-10 years, everybody had to qualify. So I'm not predicting a crash, and I'll stay in my own lane, even though I dress like Mike here. But notice
We're twinsies.
we have the same shirt on. So I want to tell you, out of all of this is coming some very interesting things. You may have noticed that Union Bank got purchased by U.S. Bank. Union Bank, we broker loans and we are direct lender. And Union Bank has always been a 3, 5, 7-year adjustable rate lender. That was the go-to source. U.S. Bank took them over, shut down wholesale on Monday. No more wholesale. But United American Mortgage worked a deal with U.S. Bank. We are going to be the only broker in California for the first 6 months of this year to have an opportunity to continue to move forward. They're going to test to see if they want to have a wholesale channel, and that's powerful. Also, we've noticed that the 2 credit unions we do business with, because credit unions have the least issues relative to defaults and late payments, that their private mortgage insurance premiums are half of what normal banks are or mortgage brokers. So consequently, we're doing a lot of business through these credit unions. They're not only are the rates better.
You can broker to a credit union?
Yes.
Like Orange County's credit union? Or
Well, here's how the technicality is, because we're kind of a hybrid company where we are direct lender who can broker. Basically, we're the lender. We lend the money, and then after it's closed, we broker it to them. They're testing this. And we are we're basically honored to be the company that allows this to happen. You know, you can't close an escrow in 8 days when you broker. So what we did is on one of them that Alita is aware of, we just closed. We basically closed it in 8 days in our name, borrower signs docs in our name, and now we'll spend the next month arguing with the underwriters of the credit union to buy it off our line. So it's a powerful thing. Sometimes I guess my point is that out of problems occur solutions. And that's what we're gonna see. We're starting to see a lot of very interesting loan products come out. Like for example, last time I was here, we talked about buy downs. At that point in time, you couldn't spend $100,000 to buy down a rate into the twos because there is regulatory issues. It would be considered charging the borrower too much because the technicality on a buy down, especially if it's a seller paid buy down, is that the buyer pays the money, the seller issues the credit. So technically, if the seller's paying the money, they can't pay that much money. Well, there's been some tweaks to those rules. And so now it's always case by case. The higher the loan amount, the more aggressive and the more fantastic the buy down will be. If it's a $100,000 loan, buy downs are still an issue because you can't charge a guy 20 points for $100,000 buy down. So anyway, I want to start by, or I should say I want to finish by saying, if you don't have any questions, I want you to know how much all of us appreciate the opportunity to be here and to be part of Aramis Real Estate's lending team. You have a huge advantage in that your other lending partner is as old as me. You've got great experience in the room, total access to virtually anybody, including Guido on the pier. We will get your clients mortgage loans. That's the point. You're not going to be in a position where your client's not going to qualify. Everybody gets approved. Now, somebody gets approved with a condition they get a job. Somebody gets approved with a condition that they actually save a down payment. But we don't deny loans. What we do is we craft plans to allow for the approval. So on that note, I want to wish you a Merry Christmas, a Happy New Year.
Before you leave, hold that thought.
Kwanzaa, don't forget Kwanzaa.
Don't forget Kwanzaa. Hanukkah. Starting this weekend.
Hanukkah.
So before Ted leaves, because you have one big takeaway that I want to make sure the whole sales team understands. So you said even with the Fed rates going up, mortgage rates are going down. So the talking point, guys, is the why, and I want you to say that again. Why Fed rates are going up, but mortgage rates are coming down? Why?
I say this because it's so important to constantly say it. I say it so many times. I didn't say it this time because I'm tired of saying it, but I'm going to say it. Feds do not control mortgage rates. They don't control long-term rates. These are short-term interest rates that they moved up 0.5%. It literally, quite literally, has nothing to do with a mortgage loan. Mortgage loans are driven by the investor's appetite to purchase mortgage-backed securities. One of the other things that happened since the last time I was here is that Fannie Mae, Freddie Mac raised the conforming loan amount. Why do we care? We don't care. We don't care. Fannie Mae loan is 6% today. A jumbo loan over the Fannie Mae limit is 5.5%. We don't care. Picture this, we had to convince a borrower, can you borrow 50 grand more? Because if you borrow 50 grand more, it gets you 0.5% lower rate. He thinks I was having Christmas cheer a little early, but it's the reality of the situation is that Feds don't control short-term rates, and so don't let your clients be caught into, oh my God, the rates went up 0.5%. No, they actually.
Okay, well, since you're touching on rates now,
Yeah.
so jumbo's a little below conforming. Where is conforming today? Where is FHA, VA, and where are we going to be in 60 days?
Okay, so FHA and VA are totally different animals. They are much lower interest rates. That because he earned it. FHA has to be lower because the mortgage insurance is incredibly obtrusive and it never goes away. Mm-hmm. So to answer your question, VA and FHA rates are like 5.375 today.
Wow.
And that's not buying it down. That's just
That's at par.
That's
So
at
now,
par.
so you can get a 5.375 on up to 1.09 million. That's the new FHA limit, right?
Correct.
Is that takes effect what 2023 or is that effect now?
Well, we're committing the sin and asking for forgiveness later. We're locking them now. and then we're funding them now, and then we're selling them after the first of the year.
So those are 5.375.
Yes.
At no points.
Yes.
Wow.
So a jumbo, a $2 million loan. The reason that's in my head is because one of the loan officers on the team locked one yesterday, 5.5% through one of our credit union partners, par price. You know, borrower pays 1 point, and 5.5%. That was 5.75 before the CPI numbers and the feds raised rates. That's the part that's
And it went
weird.
down. And
Yeah.
conforming is closer to 6.
Yeah.
So conforming is the worst loan right now.
It is.
Wow.
Yeah, it is. Borrow more money. Borrow more money.
No more money.
Anything else for Ted, guys? Questions?
Great turnout today.
Anything
This
on
is
chat?
awesome. I should have brought more cookies.
No, we got plenty of cookies. Thank you so much, Ted. Thank you.
Thank you,
Merry
Ted.
Christmas.
Pleasure. Thank you. Merry Christmas.